Hi, San Diego. This is Maggie Clemens with One World Realty, and this is your San Diego real estate market report through February of 2020. It is now Friday, March 13th, and a lot has changed just since this report came out at the end of the month. So we're going to go over this, but I want to be adding some things in as we go over the actual report. So let's get started. Every month I go over what is called the Monthly Indicators Report. This is put out by the Greater San Diego Association of Realtors. It is about a 15-page PDF, so if you would, I'm going to go through it very quickly, but if you would like a copy of it, just send me off an email and I'm happy to send you a copy so you can look over the whole thing. But we'll go over this. So as the stock market declined, so did mortgage rates, offering a bad news, good news situation. And this has already changed in the last 2 weeks because the mortgage rates did go down, but because of the amount of refis and the amount of people that are looking to get a mortgage, that the mortgage companies actually raised their rents, so their mortgage rates. So it went down a little bit, and then now it has gone up a little bit just to slow the number of people. So there's a good and bad right there. Quickly, through February, the closed sales went up, pending sales went up, inventory went down, medium sales price was up, days on market decreased, month supply decreased, and as of January, the showing index showed an increase of 20.2% year over year, which means that buyers are out looking. There are tons of people trying to take advantage of this, the low mortgage rates, but we are seeing a little bit of a slowdown here over the last couple of weeks. And that's exactly what this last sentence says. It will be important to watch the spread of the COVID-19 and its potential impacts to the overall economy in the coming weeks. So real estate is a moving target. It is always going to be changing. So what we try to do is look at a 3-month trend. And we have January and February here, and now we have the COVID-19. So it will be interesting, and we will try and keep you updated on what's happening in the market. But let's take a good look at what's happened all the way up through the end of February 2020. This is for detached markets only. New listings, we saw that so this is for just the month of February 2019 and just the month of February 2020. Well, this is year-to-date 19 and year-to-date 2020. So we'll look in this column a lot. But what this shows is from February to February, new listings was down 6.5%, and year-to-date it was down 16.2%. This is not typically scary, although it's lower than usual. We can see here in the past that it has been low, but this has been lower than usual. Pending sales went up, for the month 17.3%, and for the year almost 12%. So there may be a little bit of inventory, but people are buying them. So it's a kind of a double-edged sword right now. Closed sales is almost flat for the month, but up 6.3% year-to-date. Medium sales price went up, and this is our double-edged sword again when we look at affordability. For the month, it went up 8.3, and then year-to-date 8.9. Average sales is up year-to-date 10.6%. Volume of closed sales, well, the average price went up and we're selling more. So, of course, the volume of closed sales year-to-date went up 17.5%. A percentage of original price received has also gone up. And again, we have more buyers than we have inventory, so it's creeping up there. We're getting back into that multiple offers state. Days on market went down. It had only gone up a little bit, but it did go down 9.8 year-to-date to 37 days. So it's sitting on there just a little bit longer. This is not bad news, but our affordability index for single-family homes is flat. So it doesn't make it any more affordable, but at least it's not moving in the wrong direction. Inventory of homes for the month dropped 41.8%. Now that was for the month of February 2020 compared to the month of February 2019. Month supply of inventory is also down to 1.4 months. Attached markets, that would be condos, townhomes, row homes, that kind of thing. Let's take a look at this. So month to month and then year to date, same as the other one. So from 1 month February 2019 to February 2020, we are down 2.3%, where year-to-date we're down 5.6%. Pending sales is up in both 26% year-to-date. Closed sales is up 18.1% year-to-date. Median home prices went up 8.1% from year-to-date. Average price is up 7.6%. Average close, the amount of volume is up 27%. Again, we got a lot of buyers out that are looking right now, or at least were looking before this whole coronavirus hit. The percentage of original price increase has actually gone up. It's now 98.1. Again, we have multiple offers syndrome. So, people are offering close to whatever list price is and actually a little bit above depending on the home. Days on market has gone down 30 to 34 days, which is minus 5.6%. And affordability has crept up a little bit. So we got a lot more first-time buyers looking to buy some of these attached homes. Inventory of homes has gone down 33.4% from, again, keep this in perspective. I wish they had the year-to-date figures on here, but this is 1 month in time. So the month of February 2020 compared to the month of February 2019. And also we see a decrease in the month supply of inventory. New listings. Now this is one of my favorite slides because it shows us 2018, 19, and 20 in both the detached and in both of the attached. And we have the month and then we have the year-to-date. So we can see as far as new listings, it has dropped dramatically from the last 2 years on both the detached and the attached. But when we look at this chart, which goes all the way back to May of 2012, we can see that that is pretty normal. What we're also seeing here, though, is that the drop is much more steeper. And then we had an increase, and then here is going into March, and we're seeing it's already slowed down a little bit. So the trend is pretty normal, although a little bit lower, a little bit higher. In pending sales, again, we see the last 3 years, and we see that pending sales is up across the board. And we see that this is pretty normal for this time of year, although we're seeing a bit sharper increase. But next month will be the telltale sign here. Closed sales, has decreased just a little bit over the year-to-date from 2018, but it is up from 2019 in both detached and attached homes. And this shows a rolling 12-month average. On detached is up 3.9%, and on attached it's up 3.4%. We can see that graph here is a little bit more sporadic, and we're seeing some volatility here in the attached markets. Again, attached is more first-time buyer-ish. And so we're seeing, that is much more driven by the mortgage rates than the single family homes are. Median sales price has gone up year to date in both detached and attached. And they're going to have to get us a new chart because this is from 2012, and we can see that this is just going up and up and up. And if it continues, it will go up over the $700,000 mark, which is both exciting and scary. Average sales price, again, is up for detached and again for attached. On the average, the rolling month average, shows at $825,983, a 1.5% increase. And for attached, $500,606, which is a plus 2.2%. And we see that we had some volatility here, and then it kind of came up, and the overall trend is still going up. Dollar volume of closed sales in millions is up year to date on both detached and attached. And as we come here, we see that it actually went down, but now we're going to see an increase or not. We'll have to wait and see what the March ends up looking like. Percentage of original price received, because we have more buyers and we don't have enough inventory, then we're seeing more buyers being aggressive and offering more at list or above, as we are in a multiple offer, at least we were through the end of February, into a multiple offer situation. days on market has gone down. So this is always interesting to me because, for detached, it was down in 2018. It was down to 34. It went up in 2019, and then now it's dropped again in 2020. So the market is very much driven by buyers. Buyers are very much driven by mortgage rates. So this is where we're seeing that volatility in there. But it's not as volatile as we like to think as it's going through if we look at this graph. Housing Affordability Index. Now, this is our Achilles heel in San Diego, because if the buyers can't afford to buy, then homes will sit on the market. But right now, we are not seeing that it changing a whole lot. In fact, in detached, it's about stayed the same for the last 3 years and pretty close to the same in attached. So if it goes up, we're going to see the market start to stagnate, which will give us more inventory. So it's that whole yin and yang of real estate. Inventory of homes, and this is why we're seeing the home prices go up, is so in February, and these are just February, they're not year-to-date figures, but in February of 2018, it was 3660. 2019, it went up, and then it dropped hugely for the month of February in 2020, and we see the same thing in the attached. And that does seem pretty typical, except for this is going way down a little bit farther than what we like to see. Month supply of inventory is actually, about the same from 2018, but it has dropped. So 2019, we were starting to see inventory build up. 2020, we're not seeing the inventory come on. And we were kind of expecting this with the presidential election, but the whole COVID-19 has added a whole nother dimension that we are really in some uncharted waters, and we're just going to have to wait and see how this whole thing plays out. And then the whole market overview. This includes both the attached and detached markets, and new listings are down 12.6 total for the year to date, where pending sales is up 16.6, closed sales up 10.2, prices are up, and obviously the closed sales volume is up, and then the percentage of original price increase. So we don't know. It's been a slow start to 2020, which we were kind of anticipating, but we still believe that 2020 is the best year to put your home on the market because of the low mortgage rates. But we're going to have to wait and see how the COVID-19 affects the market, and we'll have a much more better tale of that at the end of this month. So there is your San Diego market update through February of 2020. Please take care out there. Personal hygiene, wash your hands, stay away from people, and don't go to work if you are sick. So take care, and I'll talk to you soon.